effect tomorrow, Tuesday. Former Energy Secretary and now Leyte Governor Jericho Petilia joins us for his insights on the oil crisis. Philippine inflation, jobs, and GDP data are out this week, key data points that would reveal the continuing impact of the Mideast crisis on the economy. We speak with Ron Acoba, Chief Investment Strategist of Trading Edge. And over 10,000 law enforcement personnel have been deployed in Cebu for the 2026 ASEAN Leaders Summit. Prices set to rise again this week as prolonged supply disruptions continue to rattle global markets. An industry source estimates a hike of 1 to 2 pesos per liter for diesel and 2 to 3 pesos for gasoline. These projections are based on the 4-day average of the Bean of Platts Singapore, a key pricing benchmark across the Asia-Pacific market. If implemented, this will end 3 straight weeks of diesel rollbacks. Global oil prices have surged to over $126 a barrel last week, driven by fears of the U.S.-Iran conflict could worsen, disrupt supply, and weigh on global growth. Meantime, there will be some relief for households after Regasco announced it will implement a 2 peso per kilo rollback on liquefied petroleum gas or LPG starting May 5. This is equivalent to a 22 peso price reduction for an 11-kilogram cylinder. A Business World poll of 17 analysts estimates April inflation at 5.5%, up from 4.1% in March. They cited sharp increases in fuel, electricity, and some food prices, along with a weaker peso. If realized, this would be the fastest print in over 2.5 years, or since September 2023. In a separate Business World poll, analysts say the GDP likely grew by 3.4% from January to March, slower than the revised 5.4% a year ago. The Philippine Statistics Authority will release April inflation and first quarter GDP data on May 5 and 7, respectively. Meantime, exports may also fall short of targets amid global uncertainty and U.S. trade risks. Economist Victor Abola said the export goal may not be achievable given current conditions. Under the Export Development Plan, shipments are seen at $116 to $120 billion, below the $186.7 billion target. In another development, the Asian Development Bank has launched a new facility to develop critical mineral supply chains. ADB President Masato Kanda said this will help countries move into higher value industries and create more jobs. Prices likely to move higher from tomorrow, May 5, mirroring the record rally in global crude prices following escalations in the Middle East. With the ASEAN Petroleum Security Arrangement in the works, as well as continuing debates on the oil deregulation law and fuel excise taxes, what can the government do now? And what reforms are needed to protect Filipino households and the economy? With us for more is Jericho Petilia, former Energy Secretary and current Governor of Leyte. Maupay na aga, Governor, and welcome to the program.
Maupay na aga, Cathy, and thank you for having me on your show.
So what do you make of how the government's been managing volatile oil, high pump prices over the past 60, 65 days?
It started very rough for them. We all know that, but I think they're getting the hang of it now. Okay, I feel that they're in the right direction. Of course, they'll always be criticized because nobody wants high prices, no matter how much you justify it. But I think we're getting there, especially in controlling the prices, but only on a temporary basis. Because if you keep on controlling the prices and it's too tight, okay, the danger is supply. Baka wala na mag-import. So I think we're there. We're stabilizing the price right now.
But what does getting the hang of it really mean, Governor? I mean, half the time done under a state of energy emergency. What do you make of how the Uplift Crisis Committee is going about its work?
When you have a disruption in the supply, kasi we're deregulated. So a lot of people are saying, no, this is bad for us. And, there's a lot of debate going on right now. And the DOE started with saying that we don't have any power to do anything. But later on, nakikita nila that they actually have power because under the deregulation law, when there is a war, there is a shortage, there's calamity, you can actually come in. The government can actually come in to basically even control to the point of controlling the operation of oil companies. Of course, we're not there yet, okay, because that's going to be severe, kung severe na talaga. But it has something to do with intervention of the government, has something to do with supply and price. You have to balance it.
So are you then saying, Governor, that there's no need to repeal or maybe amend the current oil deregulation law if a push comes to a shove?
I think it will have to be reviewed, but if you look at it closely, there may be a way to actually control prices, control supply at the same time, without actually scrapping the deregulation law. And the only way you can do that is for government to come in as one of the players. That's my suggestion, because we're always guessing. The government is always guessing what's going to be the price. Okay, we left it to the private sector until the government comes in with no subsidy. It has to be put in a policy that there's no subsidy. They compete with the private sector. Then you can actually set the price, or not really set the price. Come up with a trend, because you're a player now. Nobody can. No, you can't cartelize it because the government is there. It has to be a fair price.
Is that something that harks back to when you were energy secretary? Because back in 2012, you faced the Mindanao power crisis and the looming shortage here in Luzon. When you look at today's national energy emergency, what do you think we failed to learn from these episodes and how we're addressing that in the energy emergency?
I think, well, when it comes to energy, the problem with energy is everything is long term. There is no short term in energy. In fact, it spans across different governments, different presidents. So, ang sabi ko nga parati, the job, I learned this the hard way, but the job of the Secretary of Energy is to pave the way for the next administration. Anong gagawin nila? What are they going to do? What are the plans? What are the lessons that you have right now? And the solutions, for example, it takes 5 years to build a plant. So most of the plants that are going to be started now are not going to be finished within the term of President Marcos, for example. So everything is long term. Sabi na iba, you can do it in 2 years. Yeah, easier said than done. But if you actually look at the data, the plants, actually power plants, take a long time to build. The same thing for the policy on fuel also. You can't have a policy that is very short term. You have to, when we look at about fuel prices, for example, if we want to be if we want it to be sustainable for us, we have to get away from oil. We can't completely get away from oil, but we can start doing something about it by actually pushing for solar, renewables, and all those things. These are all long term. It doesn't happen overnight.
So what's going to break the impasse? Because you've got the short term, they're trying to source supply and also try to keep prices from rising, at the same time provide a long-term solution. So there's this balancing act that's so difficult to do at an energy crisis. What would you do if you were in the shoes of the energy secretary now?
We were victims of Yolanda, okay, the typhoon, and we've gone through all sorts of disaster, earthquakes, and all those things. And every time there's a crisis, okay, the number one thing that you have to do is survive the crisis, okay, and fight another day. But when you say fight another day, we should be more prepared. We have long-term plans already. But the most important thing right now is short-term is to survive the crisis right now, especially because this is something we can't control right now.
There is a call from the opposition lawmakers to tinker with policy, to review the IPIRA law, the Electric Power Industry Reform Act, and revise the rules of the Energy Regulatory Commission. Is there a need to do so now?
I think the IPIRA law should be reviewed. I think all laws should be reviewed, especially if it's crucial. I think even for energy, I think all laws okay, in my opinion, should be reviewed every 5 years because it can't be static. Okay, technology moves very fast. Okay, so does energy. The different technologies in energy. So that if we want a solid policy, we have to review it all the time to go with the changes at times.
All right, but when you look at the fuel excise taxes, are you in favor of suspending or removing the excise tax on diesel and gasoline? I mean, the president already removed LPG and kerosene weeks back, but he hasn't done anything to the other two kinds of fuels.
From an academic point of view, okay, everybody will agree with me, even economists, that to take away the taxes is actually the last thing that you want to do because that's the lifeblood of the government. Okay, so you keep the taxes, tax everybody, including the rich, and then subsidize those who really need them. So you have kind of a choice on how you're going to spend the money. However, we're a bit in a wrong timing right now because the flood control scam is very recent, is still ongoing in a sense. So pagdating sa tao, they will always say, you're just gonna pocket it, so you might as well just take it out from the pump price so that everybody will benefit. So when you have a policy, you have to take into account not only the needs of the government, but social acceptability as well. And I think that's where we have a problem right now because pagdating sa taxes, pagdating sa gobyerno, everybody thinks that it's flood control scam. Even if it's done by a few people only, it affects everybody.
Just as a final point, Governor, the ASEAN Leaders Summit just days away, and the ASEAN Petroleum Security Arrangement is being considered on a regional scale. Do you think we can count on our neighbors for supply support when they too need to take care of their own right now?
Unfortunately, the APSA is actually an agreement, but it's if you look at the agreement, it's mostly voluntary. Okay, nobody's obliged to help anybody at this point. It's you help yourself first. The problem with the ASEAN is there are only a few countries who are producing oil, and Malaysia is producing, but it's not even enough for them. Then you have Brunei, but it's only like 100,000 barrels per day. That's very, very small. So everybody is scrambling. So if you have extra, I don't think they have any extra right now. Everybody's keeping it to themselves. And if they actually help, siguro the APSA will only come in. If you have to help and you have extra for some reason, you help the ASEAN countries first before you help others. Siguro yun lang ang agreement sa binding pagdating sa APSA.
Right.
But it's mostly voluntary.
Okay, we need all the help we can get. Thank you so much. Former Energy Secretary and Leyte Governor Jericho Petilia. U.S. President Donald Trump says American forces will guide stranded ships from the still-blocked Strait of Hormuz. Trump announced the initiative, which he called Project Freedom, in a lengthy post on Truth Social, but offered little details how it would work. It will begin Monday, Middle East time. Trump says only vessels from countries not involved in the conflict will be guided by the U.S. Navy. Iran has blocked the Strait of Hormuz since the conflict erupted, crippling energy supplies and affecting the global economy. It is unclear if all the mines in the strait have been removed. The initiative comes as the U.S. has conveyed through Pakistani mediators its response to Iran's new proposal to end the conflict. Iran wants to cease hostilities and set aside talks on its nuclear program. Trump already expressed doubts over the weekend about the new proposal, saying Iran hasn't paid the price for what it has done in the past 50 years. Oil prices edged down as of 9 a.m. Philippine Standard Time. Benchmark Brent crude trading at $107 per barrel, down 0.33%. West Texas Intermediate sitting at $101 per barrel, down 0.6%. Meantime, the Organization of Petroleum Exporting Countries will raise production in June by 188,000 barrels a day. It is a signal to the markets. OPEC remains united despite UAE's departure from the cartel. OPEC members like Iraq and Kazakhstan have denied they will bolt out from the cartel as well, with Saudi Arabian officials contacting countries to ensure unity remains. You're watching Money Talks. Coming up, 10,000 security personnel deployed in Cebu for the ASEAN Leaders Summit. And Ron Acoba of Trading Edge gives us his take on the economic effects of the Middle East crisis. Keep it here on One News. Dale, good to have you with us. Maayong buntag.
Hello. Yes, maayong buntag, Cathy.
Yes. Looking forward to seeing you.
Okay.
Things are busy? Busy na ba
Yeah,
dyan?
starting today.
Okay. Saan ka ngayon? Saang lugar? Mactan, Lapu-Lapu City, Metro Cebu?
Nasa Cebu City Hall lang ako.
Okay, Cebu City is
Yeah.
a good place.
Okay.
Welcome back to Money Talks. I'm Cathy Yang. Over 10,000 personnel have been deployed to secure the 48th ASEAN Summit and related meetings this month. Let's get a live update on the preparations there from One News correspondent Dale Israel, joining us from Cebu City. Maayong buntag, Dale. What's the latest there?
Yes, maayong buntag, Cathy. That's at least 10,000 law enforcement personnel have been formally deployed following a send-off ceremony for the upcoming 48th ASEAN Leaders Summit 2026. The ceremony was held last Saturday at the Liberty Shrine in Barangay Mactan, Lapu-Lapu City, signaling heightened security preparations ahead of the high-level meetings. High-ranking officials were present during the event, including Philippine National Police Chief General Jose Melencio Nartates and Police Office 7 Regional Director Abad. And Mayor Cindy King Chan was also there. Also in attendance were representatives from key government agencies such as the Philippine Coast Guard, Bureau of Fire Protection, and the Armed Forces of the Philippines, all there in Lapu-Lapu. Meanwhile, authorities have announced the implementation of a total gun ban from across Cebu from May 4, that's today, until May 11 as part of the heightened security measures. Under this policy, only uniformed military and police personnel on official duty will be allowed to carry firearms. The public, especially motorists, are also urged to plan their travel ahead of the time with expected traffic slowdowns from May 6 to May 8. That's a stop-and-go traffic anticipated in the key areas, including in barangays Ibo, Buaya, Mactan, Punta Engaño, and Marigondon, particularly near Mactan New Town, where ASEAN meetings will be held. Authorities stress that these measures are necessary to ensure tight security, efficient traffic management, and successful hosting of the ASEAN Summit here in Cebu. That is what's happening here in Cebu. Back to you, Cathy.
All right, looks like all systems go. Maraming salamat. Dale Israel reporting to us live from Cebu City. Oil testing a 3-year high. The Philippine stock market staging a failed breakout and is now retesting critical support. The U.S. 10-year yield is back at levels that have historically rattled emerging markets. And the Philippine peso has just hit a new all-time low against the dollar. So what are all these technical trends telling us? Here to make sense of it all, Ron Acoba, Chief Investment Strategist at Trading Edge. It's good seeing you again, Ron. Welcome back to the program.
Hi, good morning, Miss Cathy. Thank you for having me.
All right, let's work on the charts and start with the WTI crude. You know, it marks a resistance at around 113.51 per barrel. That's a 3-year high. Prices that have failed to break not once but twice. So what technical confirmation are you watching for before calling a clean breakout above that level?
Well, first and foremost, while the crude prices have declined in the last few days, as you've mentioned, it's still pretty much in the vicinity of its 3-year high. And from the end of February, in fact, crude is actually still higher by about 55%. And year to date, it's up by about 81%, if I remember correctly. So as to your question, while it has pulled back and gonna go sideways in the near term, bias remains on the upside. So, we could probably see it hit at least 120 if that 113 level gets breached. But we're not there yet. In the meantime, we could see a pullback in the interim.
Right, we don't want to go there at all.
Yeah.
If we had the choice.
Of course.
Let's pull up the PSCI because it's
Yeah.
been very interesting. The chart just shows a clear failed breakout above the 6,600 resistance zone. That's a level the index breached but could not hold. So at what point do you stop calling this a pullback and start calling it a trend reversal?
Well, it's not a pullback at all. As you've mentioned, it's already a interim trend reversal after hitting at interim high of around 6.6 back in February. In fact, the sentiment during the first 2 months of the year, investors are already eyeing a recovery for the market and for the economy in general, especially coming off of weak third and fourth quarter of last year on the back of the DPWH scandal. But unfortunately, end of February, this war broke through, leading in the descent that we're seeing in the index right now. And as of now, the index is actually threatening to undercut that 5,800 level. And should that happen, which in my opinion it's quite possible that it will, because all of the other variables are pointing towards direction. Now going back, if that happens, then we'll probably revisit our November or 5-year low of around 5,500.
Okay, let's revisit the bond market because based on the chart showing the 10-year Treasury note, the yield is back near its first half 2025 highs of around 4.5%. I mean, that level has acted as a ceiling many times over the past year. But if the yields break and close decisively above 4.5%, what is your next technical target?
Then that's we'll probably get next technical target above 4.5% would be the 5% level, and that's gonna obviously weigh down on sentiment because that's gonna spill over to higher domestic yields as well. In fact, this increase in U.S. yields from about 3.9 as of end of February to its present level of around 4.42. That actually, of course, was born because of the surge in crude prices. And this is actually one of the reasons why we're seeing the exchange rate trading at new highs as of the moment.
Okay, let's take a look at that dollar peso chart. New all-time highs for the pair, meaning a record weak peso. But how do you determine your next upside target, considering this is unprecedented? Is there any technical basis left to call a top?
Well, not yet, because considering the fact that there's no resistance ahead, so the bias is for the exchange rate to move higher, further into the charted zone. The only one that we can pinpoint is a psychological stop, perhaps. The next one would be, we're doing around 61.3, so the next potential psychological level would be around 62. And the next one above that is 63. But objectively speaking, there's no resistance. There's no historical resistance ahead. So bias will likely head to 62 next from this current level.
Let's talk about that wild card. We just have about a minute to go. It's the central bank intervention at this stage. What level do you think does the chart tell you that BSP dollar selling has actually made a technical dent, if at all?
So far, none. I mean, there's no notable, for me, the way that I see it, even just judging by the volatility on a daily basis of the exchange rate, I see no intervention at all. For example, if you check in the USD JPY exchange rate, it's clear that the BOJ has intervened into their exchange rate. We haven't seen that kind of reversal and strong volatility to the downside, which means that the BSP is not yet dipping their toes in the open market.
Not yet. Well, we hope not, because we got to save our dollars in our coffers. Thank you so much for joining us and for the analysis. Ron Acoba of Trading Edge. And as the Philippine peso slides to record lows, daily expenses are rising, putting more pressure on household budgets across the country. Mobile journalist Fatima Baduria has this report.
Filipino households are feeling the impact of the weak peso across expenses as it slides to 61 against the US dollar. The depreciating peso has been making imports, including food, more expensive. Unfortunately, families of OFWs are not exempt, says Mikel, who relies on remittances from his mother who works in Singapore. At present, a Singaporean dollar is at 48 pesos.
So kahit na magtaas yung exchange rate, kung magtataas din ang presyo sa Pilipinas, like halos wala rin pinagbago. Yung food, parang lahat tumataas ng 50 pesos, ganyan.
Even more so for Filipinos whose earnings have not increased yet are forced to spend more as the impact of weak peso ripples throughout daily needs. For Jocelyn, whose only source of income is her ihawan stand, rising expenses amid the crisis have become a burden.
Ilang puhunan ko. Kulang na sa sobrang taas ng bilihin. Katulad ngayon, ang puhunan ko dati, minsan nasa 1.8, ngayon 2.5. Uli nga lang, tumaas na. Tapos yung mga barbecue, lahat ng item sa tinda ko, puro taas na eh.
To retain the customers she has left, she decided not to increase the prices of her food items.
Siyempre, ang tao, mahanap ng murang tinda. Pag mahal ang tinda mo, walang lalapit sa'yo. Kailangan babaan mo lang din ang tinda, yung kaya ng tao. Kaya hindi rin ako makapagtaas ng paninda kahit mataas ang bilihin.
While waiting for a relief in prices, Jocelyn has resolved to tighten her belt for now. Kapatid Fatima Baduria, we are One News.
Checking in on the markets, U.S. stock futures little changed as investors monitor developments in the U.S.-Iran conflict. The Dow, the S&P 500, and NASDAQ all up by about 0.1%. Asian markets are mixed this Monday. The South Korean Kospi surges 2.7%. Australia's ASX 200 falls nearly 1/3%. And Japan's Nikkei 225 closed until Wednesday. Today, Japan is observing Greenery Day. The S&P and the NASDAQ set fresh records last Friday on the back of soaring tech stocks, including Apple, Intel, Qualcomm, and SanDisk. The NASDAQ was up nearly 0.9%, S&P gained nearly 1/3%, the Dow fell 1/3%. And a quick check on our own markets in this first trading day of the week and month. PSEI opens this Monday higher by about 0.6%, 5,872. Analysts see no clear positive catalysts this week. 2TradeAsia.com says the combination of geopolitical risks, stickier global inflation, a firmer dollar, and domestic pressures create a challenging environment for sustaining aggressive risk positioning in Philippine equities. As for the Philippine peso, it opens today a tad stronger, 61.42 to the dollar. Traders say the peso may continue to weaken this week and possibly hit new lows. The release of inflation and GDP data may weigh on sentiment as these reflect the impact of the Middle East conflict on the economy. In corporate news, Lopez-led FirstGen Corp reduces its planned hydropower investment with Razon-led Prime Infra Capital Inc. In a disclosure this morning, FirstGen says it had cut its stake in Prime Infra's pump storage portfolio from 40 to 33%. This compromises the 1,400-megawatt project in Paquil, Laguna, and 600-megawatt at the Wawa Dam in Rizal, with a revised transaction valued at 61.9 billion pesos. Notably, the agreement retains the change of management control provisions that have become a flashpoint in the feud between FirstGen President Vicky Lopez and his cousins. It's a rule that makes it costly for FirstGen to change leadership, potentially losing up to 23 billion pesos if the provision is triggered. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.